In today's video, we're going to be taking a look at a chart that perfectly predicted the bottom and will likely predict the official start of the next bull run. We'll also go over the high time frame price action and short-term time frame price action. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at some high time frame charts surrounding the 4-year cycle, the bear market, and the next start to the bull run. We'll also be taking a look at the short-term price action and higher time frame price action. Bitcoin has seen a absolutely insane 24 hours with the highest total liquidations we have seen in just over 3 months. So there is a lot to discuss today, guys, but before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and so much more to keep you in the loop of cryptocurrency, Bitcoin, and the relevant economic news. Alongside this, guys, if you're interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Not only will you get access to our trading group, you'll also get access to our various group chats. Our general chat, our trading chart and education chat, our news chat, our help chat, our trade setup chat, and our daily video chat. If you're interested in getting access to all of that with over 600 members, contact me in the pinned comment of the free channel for more information. Let's go ahead, guys, and jump into the video. So as we said, we've seen a pretty intense 24 hours in cryptocurrency, not just for Bitcoin, but for altcoins, for Ethereum, for absolutely everything, with a 165% increase in 24-hour volume, bringing us to a total of 209 billion. 24-hour liquidations have jumped 563%, sitting at a massive $49 million. Looking at those liquidations, very evenly split between longs and shorts, with just over 270 million on the short side and a whopping 218 million on that long side, as the market saw massive volatility toward the upside and the downside. Just taking a look at Bitcoin over here, we saw a huge push upon the breakout of that major trigger point. Remember, we're discussing that major trigger point at 36,000. We told you guys 36,000, next likely move is going to be between 38 to 40,000. We saw the move to 48, and then we saw a massive 6% correction all the way back down to 35.6. With that, we saw altcoins dropping 20% left and right within 1 minute candles. Now, this is obviously not natural price action, right? This is insiders, big whales taking profits on the large moves we've seen over the coming weeks. A lot of these coins have bounced from these levels relatively well, including Bitcoin, but a lot of them are still straggling behind. We're going to be taking a look at the short term as well as a macro today, so we'll get into that in just a moment. Moving over to the DXY, the DXY has actually shown some strength in the last 24 hours, breaking and closing above that 50 EMA and horizontal trend line. Again, we have to remain objective. While we are above the horizontal trend line, we are bullish. We're actually expecting a continuation upwards for the DXY. If the DXY goes upwards, the stock market will come down. Bitcoin, again, will potentially experience some selling pressure, but with the narrative that is driving Bitcoin up, which is the looming potential approval of the ETFs in the next potential 10 days, it is unlikely that Bitcoin is going to be shaken by the DXY. However, it is something to keep in mind if you are in the traditional markets. Moving over to the economic data, we do have our core inflation data coming out in about 4 days. Again, this is going to be very important as it's going to set the precedent for overall systematic risk in the market moving into the next 4 weeks. As well as that, on the 15th, we do have PPI and of course retail sales, which could be leading for our next inflation release. Moving over to the stock market, taking a look at the S&P 500, we have seen, and I'll go ahead and clear this chart a little bit more over here, we have seen that daily rejection from that major uptrending support level represented by this diagonal black line. Of course, this is the trend line of which we remained above for about 12 months. A breakdown of this level was pretty catastrophic, resulting in a move towards this neckline. We saw a strong bounce from POC to retest this level, and we are now rejecting from it. Right now, we are still very much looking pretty weak on the S&P until we can start clearing this level. So again, we need to get above our 4,400 level to start to show some strength. Until then, the possibilities of continuations downwards, particularly if the DXY continues upwards, is quite high. Moving over to the Dow Jones, a very similar scenario over here, guys. Again, it is looking a little bit better than the S&P from a structural perspective, but we do still have that major horizontal resistance sitting at 34,200. Again, we need to break above that level to continue upwards. If we remain below this level, this area is a resistance, and if the DXY continues up, we can expect a continuation lower. So let's go ahead and jump into Bitcoin. Now, I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. There is so much to talk about, and Ethereum as well, so much to talk about. I think we're going to leave an Ethereum analysis for tonight's video on our second channel. If you're not on our second channel, go ahead and check it out. We do altcoin videos over there. We'll do an Ethereum analysis on that one tonight. So moving over to Bitcoin, I want to start with talking about these macro charts. And I want to start on the 4-year cycle and then move over to the bull run, then move over to targets, and then move over to the smaller time frame. So a really interesting fact, guys. We are, according to the 4-year cycle, just about 152 days away until we enter the official bull run phase of the 4-year cycle. Now, it doesn't mean the bull run will start in 152 days. It doesn't mean we're going to see a significant explosion in price in 152 days, but it means, according to the 4-year cycle, we will be entering the bull run phase of the cycle. That's only 152 days, guys, about, 5 months. So really interesting, something to keep your eyes on and prepare for if you're looking for accumulation. Looking at the prior cycles, you can see the significant growth in the bull runs started a couple months after the break into that bull run phase. If we take a look at exactly where we saw the bull run officially kick off, it was when we crossed a monthly candle above that dotted trend line. Right over here. You can actually see in both instances, that was about 4 to 5 months after we entered that bull run phase according to the 4-year cycle. So if we hold true that, we're looking for around about a August, September 2024 phase where the bull run will really start to pick up strength, and that is when we're going to go parabolic according to our prior cycle data. So something to keep in mind, guys, 152 days until we enter the bull run phase, and we're looking at about 3, 4, 5 months after that period until volume, volatility, velocity really starts to pick up and we go into this parabolic bull run. Taking a look at the 4-year cycle again, guys, we can see we are traveling along very nicely. Again, like we said already, for that cycle to start, we do need to do 3 things. Number 1, we need to enter the bull run phase, which means crossing into this green territory. That will occur in 152 days. Number 2, we need to see a break above that 48K level, which is going to be that dotted trend line. You can see a horizontal dotted trend line. We broke a monthly candle above it, okay? And number 3 is what we're about to get into. So this chart over here has predicted not only the bottom of the bear markets every single time to the week, but as well as the exact point of which the bull run has officially kicked off. And I don't mean we're building up to it. Of course, we build up to it into a macro uptrend, and then the macro uptrend turns into a bull market, but a point at which a bull run kicks off. This chart has predicted it perfectly. So this is a chart we've been discussing on the channel, not often, but we've discussed it a few times in the past, particularly the end of last year and January of this year was a chart we brought up a fair bit. And it predicted the bottom perfectly. I'm going to show you how it actually did that. If we take a look at this chart, we have one indicator on it. It is the Ichimoku cloud indicator. The settings I have on this one over here, I'll go ahead and show you. We have everything turned off except the baseline, and I like to keep the plotted backgrounds on. You can keep your leading spans on if you want. However, that is not necessary if you know where they actually sit. So how it works, every single time we see a weekly pivot of the baseline below the clouds after being in an uptrend, so breaking below the leading span B, we print the bottom signal. We have seen that once, okay? We've seen that twice, and we've seen it 3 times. This is where it gets very interesting. Every single time, okay? Every single time we break the candle, okay? We break the candle above the upper band of the cloud, okay? The leading span A, while we are above the baseline, okay, right over here, that is when the bull run officially starts. So we are looking for that to occur again around about that same time, according to this chart over here, which is around about April 2024 to September 2024. So definitely something to keep in mind, guys. Again, this chart has been particularly accurate at predicting the bottoms. Again, it predicts the bottoms on the week. It doesn't really predict the bull runs at the start, but it is a little bit delayed to do so. But in fact, it's a fantastic tool to tell you when that explosive rally may be coming up. So moving into next cycle, if you're looking to predict the bottom, this might be a chart you should be looking for. Now, here's another chart I want to show you, and it goes back to the monthly chart over here. If we go ahead and delete everything, we bring up that exact indicator, which is going to be the Ichimoku cloud, okay? And we take everything off again except the baseline. On the monthly chart, we can see another very similar pattern. Every single time we break a monthly candle above, we continue above in a bull run until we close a monthly candle below, where we continue into the bottom, okay? We break a monthly candle above, we remain above the baseline until we make a candle below, we continue to the bottom. The current baseline is sitting at 42,000 US dollars. Something to keep in mind, guys. Let's go ahead and jump over to the daily and short-term price action. So Bitcoin has seen a massive blast upwards ever since we broke above 36,000 US dollars. So what we're going to go ahead and do is delete everything on the short term and break it down once again. So as you know already, horizontal levels on the chart remain on the chart. And therefore, it is very quick and easy for us to go ahead and draw in our bearish triggers. For us to see a continuation downwards to $32,000, we have to see that bearish trigger of 33,350 be taken out. A breakdown of this level will result in a strong correction down to 32, potentially even 30,600 according to this chart. Okay, so if we do want to see a correction downwards, we need to clear that local low. If we do see a correction downwards, we will remain macro bullish provided we keep a monthly candle above $32,000. If we go back to this 4-year cycle chart, we can see $32,000 is represented by the horizontal red line. What you will notice is once we close a monthly candle above this level, we never have in the past closed a monthly candle back below it. So If we happen to close a monthly candle back below 32,000, that would be very significant, as it would represent something on a structural basis that hasn't happened in the prior 2 cycles. Until then, we would assume that we will not see a monthly candle below 32,000 according to our prior structural data. Moving over to the short term again, if we want to see the price correct, again, we need to lose that uptrend we've developed. The uptrend is represented by this diagonal uptrending support line. If the price manages to break below this uptrending diagonal support line, it is very likely we continue down to retest 33,350, which will result in a breakdown and continuation lower. Until then, Bitcoin has a whole heap of structural support. Let's go ahead and draw our support levels in now. So we do have, of course, that level we only just broke above yesterday, which is going to be that $36,000 level of support. You can actually see Bitcoin has come back down, retested this level, and bounced from it on the short term. If we do deviate back below this level, we will be officially in a downtrend on the 4-hour chart, and that is very likely to push Bitcoin back down to retest these local high points. So we're looking at around 35,300 and potentially the uptrending support level of this chart. Until then, Bitcoin is in a short-term uptrend. So remember, when we have a neckline of resistance and we break above it, that neckline becomes support. And if we break below support, we enter a continuation downwards until we reach our next support level. So we're looking for that continuation downwards to 35,300 if 36 is lost. Let's go ahead and break it down to an even smaller time frame, guys. Let's go down to a 30-minute chart. So we'll go ahead and draw that 36K level in once more over here. You can see some very, very strong support around that level. Again, very choppy price action, huge moves toward the downside, and now we are gradually climbing back upwards. If we want to see Bitcoin continue upwards again, we're going to have to clear this local top point. You can see it as a trigger point on the VRPV with a whole cluster of price action developing around about this level. Put our low in right over here. We'll go ahead and chuck that low in again, at 36K low over here, and we do have a nice little gap of support right over here. So if we do see a breakdown of this level, expect a continuation down to the POC, which is again 35,300. Okay, if we do see a break above 36,700, we'll be expecting a continuation potentially to come and reclaim those 38K highs. That is a short-term price action. Let's zoom out a little bit more here on the 3-day chart and take a look at what is happening. So if you have been following our channel, you would know, guys, and I hate to be the guy who keeps saying this shit because I really don't like to go over it, but we did call the bottom down to 16.5K, and ever since then, we have told you the most important levels you should be watching out for: 25.2, 28.4, 32K. And what we have been saying this entire time, what we've said this entire way down and over here, we said that the most important level for us to break above to enter a bull run is going to be 48K. But going down from there, we can take a look at the VRPV, and we can tell you, when we push to that 48,000 to 38K level, we are going to find the first area of resistance within this macro range. So this is our macro range over here, okay? This is going to be our bull run trigger, okay? This is going to be our macro bullish trigger, okay? But what the hell am I writing? Ignore that. That is our macro bullish trigger. This is our macro bull run trigger, okay? And within this range, we have obviously got areas of resistance. Our major first area of resistance is going to be that 48K level, okay? That 40K level to that 38K level according to the VRPV. We can see we have a run up into the VRP and we have a drop off over here. This drop off over here signifies this area is going to be an area of resistance just prior to it. So we do know 38 to 40K is going to be a very difficult level for Bitcoin to push past. And if we are going to see rejections, if we're going to see a pullback on the high time frame, if we're going to see anything occur, this is the likely place it will develop from. If we get above 40,000, the continuation upwards will begin. But if we're going to see corrections and pullbacks, it is going to develop from $38,000 to $40,000.